Florian Grummes from the MidasTouchConsulting.com is back again to talk about precious metals prices in the present and precious metals prices in the future, and we'll tell you why. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Florian Grummes, welcome back to Metal Money. How are you doing?
Hey, Patrick. Thanks for having me. I'm doing well. Thanks.
Good. Glad to know you're doing well and great to have you back once again. Florian, this weekly gold symmetrical triangle pattern shows us that we are testing the upper boundaries once again. And we did have a May breakout, although it was somewhat short-lived. Do you see any breakout to the upside or perhaps downside for gold short-term as we near the close of this particular pattern?
Well, right now, gold is somehow neutral, trading around the 200-day moving average. This one comes in at around 1820, and it managed to quickly run towards 1834, I think, last Thursday, but then came all the way back down. And yeah, as long as it holds above 1800, I'm not too worried in the short term. I would say 1770, that's the number that I don't want to see. I mean, that number has to hold, okay, for any bullish scenario towards the summer now. That would be the lower support line of that triangle. And on the upside, I think 1880 needs to break at some point, and this is still quite a few dollars away. So the bulls still have to do quite a lot of work here. In the short term, I think it's neutral.
Okay, so you have 1770 as a bottom number then, because my next question was going to be, we saw gold peak back in August of 2020 at about 2,070 per ounce or so, and since then it couldn't sustain 1950, couldn't sustain 1900, had a rough time even sustaining 1825 levels. We saw it bounce below that, and I was going to ask you short term, should we see gold continue to move on a downward trend, what would your bottom number be? So you're looking at 1770.
Yeah, that would be like the number that I that has to hold, I would say, for any bullish scenario over the summer towards autumn, I would say. If it breaks, gold obviously still will continue to correct then. In that case, my absolute worst case, actually within this ongoing bull market, would be 1600. But I think the probability for such a low move the probability is rather low for that kind of move. I think what gold is doing is, once again, like always, trying to confuse everybody. So it's basically been doing nothing the whole July. It moved sideways, mainly between 1795 and 1810, a very small trading range. And then you had the Fed day last week, and then it dropped one more time towards 1792, and then quickly turned around, and within a day it ran up to 1835. And obviously $40 within a day. Everybody's like, wow, I'm missing the move. What's going on now? And people jump in at 1830 and higher, and now we're back at 1810. So everybody who bought last Thursday is underwater. And in the end of the day, nothing has happened, right? I mean, gold tried to stage a rally. It failed so far, but then again, it doesn't look too bad either. So we're still in neutral waters here. This sideways action is very tricky. Most of the time, most of the players are getting caught on the wrong side. You just have to be patient. Market is trying to confuse you.
Yeah, you said gold is doing its best to confuse us. I wonder what the heck silver is doing then if gold is confusing us. But in a recent silver daily call you posted on Twitter, it was noticed that silver looks to be trading below some of its moving day averages and trading in this channel that you noted with these white lines here. What happens should silver break the support level noted in green?
Well, silver also is kind of like in the very big picture. I mean, first of all, it's running sideways since last August, since 1 year. And it's been running between $21 on the downside and $30 on the upside. And we are seeing still a series of higher lows. And at the same time, we have this horizontal resistance zone around $30. And silver, as gold, is trying to recover or reconquer the 200-day moving average, which in silver is around about 25.87, something like this. And yeah, if the support fails, I think we could probably test the $24 level again. But that would be, I would say, that the worst case within a bullish scenario. If the $24 doesn't hold, obviously we will go down back to the $21 level. But I don't see all this. I think, again, same is true what I just said for gold. Market is trying to confuse you. Just before these big moves, the market has to make sure that everybody's out of the market. It's always the same, you know. Usually everybody is being thrown out either because the market had been doing nothing for many, many weeks and months, and the people get so impatient then they give up, or you have one sharp down move that basically clears out all the long positions, and then the market is ready to move higher. So in this year, I think we had July with this sideways move. Most people are very impatient now, and of course, it's hard to bring everything together. No? The macro picture, the money printing, the inflation everywhere, and gold and silver are not doing anything. But we have to remember that in the bigger picture, gold and silver are still in this correction, digestion kind of phase after that strong 2-year rally. Gold went from 1160 to 2075. Within 2 years, there was a $900 gain, 80%. Silver went from $12 to $30. These are big moves for those old-fashioned classical markets, I would say, okay? So it takes time to digest this, and I think we're still in that phase. But again, I'm still very optimistic that we will see some form of a summer rally, as long as gold holds above 1770. That's the most important thing. I mean, silver has not been leading. It hasn't been weaker as gold neither, but I think gold will have to make the move in the summer first, and then silver will catch up.
You know, speaking of that money printing, a recent article from Market Watch where Fed Governor Christopher Waller wants to taper early and fast, citing if there should be favorable job reports numbers in July and August. And he goes on to say, if so, the Fed can start tapering in October. Florian, whether or not the job numbers are favorable, are the markets ready for a tightening in October, which does have a history of being a month for market bloodbaths?
Well, I mean, I think most of us gold bugs are strongly of the belief that the Fed won't be able to taper anywhere anyway, because we've seen it in the summer of 2019 with the repo prices after they started hiking. We've seen it actually. I mean, it's been the financial crisis in 2008 was the result of raising interest rates too fast again, and I don't believe that they will ever be able to substantially raise interest rates again. And as soon as they do, the market will tell them that it's not working, and then they will quickly turn around again. And that's actually then the moments where you can see gold and silver spiking when the market realizes that it's been basically believing in something wrong. But we're not here at that point yet. No? I don't think they will be able to raise rates in October. No way. I think that when you talked about the stock markets, they're still in a strong bullish uptrend. That's also one of the maybe the problems that the precious metals experience is that you have a strong trending stock market, and the Nasdaq is super strong. We still haven't seen the typical blow-off parabolic top in those markets. I mean, we are in a multi-year bull market. Those bull markets usually don't end just like this. They usually have a final stage where you see an index doubling within a few weeks or even months. So I think this still hasn't happened. It could happen this year towards autumn, end of the year maybe, but it could also take another few years until the stock markets top out. And yes, October seasonality-wise for the stock market is a little bit challenging, but I don't see any real big crash here. I think the money printing continues. That means the cracker boom continues, and overall everything is moving higher. And sometimes it's the stock market that is booming and outperforming everything else. Then you have Bitcoin at some stage outperforming everything else, and then it will be silver and gold at some point again outperforming the rest, and then you will see commodities again like copper and oil we've seen this year. Maybe next year they will have another run. So there's just a sector rotation, if you want, but overall I think everything's going higher.
Okay, so the sequence of events looked like it would have been from the Fed where they would like to start tapering, which would eventually give them room to raise interest rates. And so your belief is that we won't even get past stage one with the Fed being able to taper before the markets really start to shudder.
No, I don't think so. I mean, the thing that did harm to gold in June was when the Fed said, yeah, in 2 years we might start thinking about hiking rates. And this is like so far out there still. And I mean, we know that many people in America have not come back to work. It's easier and makes more sense for them to stay at home and live on social welfare checks. Um, I doubt that this will at all be even possible to taper and then to start hiking rates. Is no way. I mean, we are in this final stage of a fiat money, paper money experiment after 50 years since the end of the gold standard. And you can see things are getting more and more parabolic. There is no way out. This is an exponential curve, an exponential function. There is no turnaround. It's just getting more and more parabolic, and it's getting more and more faster. And I completely doubted that this is at all possible. So you will see talks. They will try to confuse you. They will try to create fear because markets are always driven by emotions as well and the perceptions of the people. But in the end of the day, I think the money printing simply continues, and we will probably at some point have even lower interest rates.
If the Fed can't even reach the part one where they taper and they continue money printing, what would then be the catalyst for gold to rise? Being that it's been through all this money printing and it hasn't really been able to sustain certain levels. Silver hasn't been able to sustain higher levels, and if this money printing continues, what would then be the catalyst to finally push these metals up?
I mean, I think there is enough catalysts there. It's just that the market is focusing on other things at the moment. I mean, all that we talked about is actually on the table since 15 years, since 20 years in the end of the day, right? And I mean, back then gold was, when I started investing in gold, it was trading at 250 to $300. Now it's trading at $1,800. Um, the short-term noise is always so confusing, but I mean, all the central banks keep printing money. You just have to, I mean, that's, in my opinion, the most important chart to understand is the balance sheets of the central banks, specifically the Fed and the ECB. And you see this, it's just going on like this. There is no stopping, there's no turnaround. And if they stop for a week, you can immediately see that the stock market is getting into troubles. So just here in the Eurozone alone, the ECB is creating at least 25 billion euros out of thin air every week. It's been between 25 and 50 billion euros every week. And this is going somewhere, this money. And yeah, sometimes it's the Bitcoin who looks more attractive because there's a nice run and a rally and a trend, and then people running in that direction. The next time you have the stock market looking well and they run there, and then the next time it's precious metals again. So I don't think that they really need a catalyst. It's just that what probably is true is that the gold bulls need more confidence. That's something that is missing right now after this 1 year of correction. As I said before, many people gave up, lots of questioning, they're confused, and they simply are missing the confidence that gold and silver are here to stay and going to move higher in price. So that's probably the main thing But once gold is back above its 200-day moving average, and then maybe the moving average also will start moving higher again, you will have a solid ground or a base for which we then start the next rally towards $2,000.
Yeah, that's a good point. You know that you brought up the Fed balance sheet, and that worries me because if it keeps going, it's going to be taller than me pretty soon. I'm a short guy, so Florian, we appreciate the time you've given again, and I hope we can do this again soon.
Sure, you're welcome. Thanks, Patrick.
That was Florian Grummes from MidasTouchConsulting.com offering his opinion on which way short-term silver and gold might go should the Fed finagle the markets. As always, please leave your thoughts in the comment section below and remember to keep it liquid, keep it real. And I'll see you on the next episode of Metal Money.